Revolve Renewable Power is a developer and operator of renewable power projects in the US, Mexico, and Canada. We've got Revolve's new CEO, Mike Clark, joining us, along with CFO Tanya Ontiveros, to discuss the company's recent financial results and today's interconnection announcement of Revolve's 50-megawatt Primus wind project. It's Tuesday, December the 3rd. I'm Martin Gago with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. Mike, Tanya, thank you very much for joining us. Welcome.
Thanks a lot. Great to be here, Martin.
Thanks for having us here.
You joined Revolve about a month ago. Welcome to the first interview here on Radius. Why don't you tell us about yourself and how you ended up at Revolve?
Yeah, great. Well, thanks for having me, Martin. It is great to be joining you, and also great to be a part of the Revolve team. So, a bit of my background: I have a pretty long history in the renewables market and the resource sector for the last 20 years or so, with various microcap and small cap companies. Primarily a wind energy developer and solar project developer, along with solar EPC development. So that is the engineer, procure, construct side of the business down in the United States and here in Canada. And as you noted, joined Revolve about a month ago, and really love the team, love the prospects and the pipeline that we have in front of us. So pretty excited to join as well. And Tanya joined in 2024 as well. So we have a relatively new Canadian-based leadership team that really is just a way to augment the great team that we have currently at Revolve.
Well, and the Revolve team is pretty international. You guys are based in Vancouver. Steve, who we've previously had on the show, is based out of Ireland, I believe. And then we've had some of your folks from Mexico as well, where you've got some operations there as well. So really a distributed organization with distributed generation.
Yeah, absolutely. And so Steve, as you know, is based in Dublin. He's still actively involved. He's the executive chairman now. Omar is our president and COO, who's based in Mexico with the team in Mexico. The two of them, of course, were founders of Revolve, so still intimately involved with the company. But really, it's a really good mix from a leadership team perspective, because, you know, as you mentioned, we have projects under development and operating in Canada and in Mexico, and we have development stage projects in the US. So having a footprint in every company for a company this size is quite unique, I think, and makes us attractive to investors.
And why don't you tell us about your Q1 fiscal 2025 results that you just put out?
Yeah, absolutely. So I'll just flip through the presentation here a little bit and touch on a couple of the high-level numbers. And all of this is available on our website as well at revolve-renewablepower.com. And really, the high level for us, the important number is related to the recurring revenue. So 449,000 in recurring revenue. So these are projects that generate revenue on an ongoing basis, if not long-term basis, under contract, high margin projects, high margin assets that essentially are cash flowing from day one and have anywhere from 10 to 15 to 20 years lifespan under various power purchase agreements. And as we see us growing, we'll absolutely see that grow over time. That recurring revenue is quite important because, again, it really contributes to our bottom line. From an operating capacity, net operating of 11 megawatts. So it's a good substantial amount of operating assets with about 3.5 megawatts currently under construction, with a pretty significant development pipeline beyond that as well. And just touching briefly on that, the sort of development portfolio that we have, you see a couple of 3 projects here in Canada, 2 run-of-river, an interest in a wind project in Alberta, and then some distributed generation projects in Mexico, and then also some development stage projects in the United States as well. So a diversified project mix, and also diversified from a geographical perspective as well. And maybe Tanya, you want to jump in here and review a little bit the actual financials and the recurring revenue stream that we're seeing.
Yeah, thanks, Mike. Yeah, so yeah, very, very, very exciting here. We have a revenue stream based on our current projects in Mexico and in Canada. So our electricity generation increased by 384% with respect to the prior year, and also our revenue increased by 310%, which Mike already mentioned. There has been significant increase in our recurring revenue. This is driven by the electricity generation from our operational DG portfolio and our Box Springs wind project here in Canada, in Alberta. And you know, that's very good news as we have that recurring revenue. And on an annual basis, we're projecting revenue between 1.8 million and $2 million US for our current portfolio projects. With respect to our cash position, we are sitting at $2.6 million US as of the end of the quarter. And we also have our assets in our balance sheet, which are directly related to the distributed generation projects, as well as the Box Springs wind project in Alberta. And you know, there were some changes based on our foreign exchange fluctuations, but you know, we're sitting with almost like $7.5 million of assets. And then our current liabilities increased to $9.7 million, and that's just directly related to some balances that needed to be reclassified into current liabilities for the year.
Yeah, important to note as well, Martin, that debt that we see there, those long-term liabilities, and even the current liabilities in terms of the debt, the majority of that is project level debt, so non-recourse debt as well, so tied to those operating assets. And I think what you see here in terms of the financials is really a good stable platform for growth in terms of that recurring revenue, but really sets us up nicely for the coming year as we look at increasing that and really building on this growth story. You know, we don't see us in the short term as a yield co. You know, I think people want some significant upside in terms of the market, and that's really what we're offering is a good stable platform, but also significant opportunities for growth.
The forecast or outlook on your revenues, is that for fiscal 2025, or is that the for your current run rate? Could you just clarify those revenue outlook?
So what Tanya was mentioning in terms of the 1.8 to 2.2 million US in terms of revenue, so that would be for fiscal 2025. So that's basically an annualized number based on the current assets under contract that are generating recurring revenue for us. That's really at the beginning of the year, so it's entirely possible that we add projects to that mix and that asset mix, both from an operating project perspective, but also potentially from the utility projects as well. So that's really a baseline in terms of what we see for the revenue moving through fiscal year 2025.
The revenues, are they all generated out of Canada, or is there some Mexican production in that as well?
Yeah, there's definitely some Mexican production there. So our distributed generation assets, which are essentially rooftop solar and or battery storage projects, we have a few of those in Mexico. I would say, maybe correct me here or clarify, Tanya, but in terms of the revenue breakdown, I think probably about 60 to 75% of it comes from Canada, the remainder from Mexico as it stands right now.
Yeah, that's pretty close, yeah.
And as well, in the news release, you discussed with your gross margins, they're healthy right now, but as you grow the business, those are expected to expand as well.
Yeah, absolutely. So if you think of a portfolio of projects, you know, the greater the number of projects you have in that portfolio, the greater the opportunity for synergies and efficiencies across that portfolio, not just on the specific project level basis, but also in terms of the cost to manage them. So I think as we grow and we get to scale, we'll see those increase. But also, as you know, some of these projects we picked up as operating assets, as we optimize those and bring our expertise to bear, I think we'll see an increase in those margins as well. Generally speaking, of course, operating assets have a pretty high margin because the operating costs, especially for projects like these, you know, solar projects in particular, very low operating costs, so very high margins. Wind, there's a bit more maintenance to it, but still very high margins with respect to operating assets.
Is there much seasonality in these projects, like from quarter to quarter? Are we going to see different, like, because it's in the winter and we don't get as much solar, or run of river, there's bigger flow in the springtime or something?
Yeah, there's definitely seasonality to every renewable. So with respect to run of river, the lower flow comes later in the year and into winter. In the spring, of course, you get spring freshet, which is when all of the snow melts. And that period of time over spring and into summer is really where you see a large proportion of the revenue generated and the generation. For wind, it's kind of project specific. In many places, it is windier over the winter. Some places it's windy all year round, like the Colorado project that we're going to talk about has good, strong winds all year round. That's relatively stable over the course of the year, but there is still some seasonality to it. And with solar, again, it's very dependent on the location. Obviously, as anyone can guess, if it's sunny all year round, there's very little seasonality. And in some places where, if you're in, say, British Columbia or Ontario, there is a bit more seasonality to it as well. Now, that, of course, is modeled out in terms of, the financial projections that we put together. So there is detailed analysis that's done in advance of building those projects. So we understand what those cash flows look like over time in order to service debt mostly. And so having this balanced portfolio like we have, I think is really beneficial, not just in terms of cash flow, but in terms of relatively consistent cash flow.
Excellent. And do you have any over the next 12 months, any of your own projects, not potentially to be acquired projects, that are expected to come online and start producing power and revenues?
Yeah, definitely. So in Mexico, we expect at least a couple of the distributed generation projects to come online. We currently have about 3.5 megawatts under construction. One is a rooftop solar project, and the other is a CHP, or a combined heat power project that remains in permitting, take a little bit longer than expected, but it's going to come online at some point, I would expect, in this new year. So that would be additive or accretive to the revenue for us. On the utility side, the projects that we have on the utility side, they may be at ready to build stage. So all permits, everything done, power purchase agreement in place by the end of 2025, but likely not in operation, because those construction periods will be, anywhere from 6 to 8 months, depending on the size of the project. So absolutely, yes, there should be additions to that recurring revenue stream this year. And of course, you sort of alluded to it, but there is the potential for other M&A activity as well. I think we've talked about this in the past, and I know Steve has, in terms of our focus on operating assets or late stage projects that we can acquire. We've done it in the past, and we think there's opportunity to do it again.
That seems to be a good point to transition to today's news on your Primus project down in Colorado. Why don't you tell us what's going on there?
Yeah, absolutely. So we have a project that is nameplate capacity, 49.6 megawatts. If you look at utility scale projects, well, really any kind of project, oftentimes one of the main constraints is interconnection. It's not just as simple as saying, hey, it's windy in this location, let's go and build a wind farm, or it's sunny, let's go build a solar project. You have to get it to market. So you have to have someone that'll buy your electricity, and then you have to have the ability to get it to market. So that's over the transmission or distribution lines. So today we finalized the interconnection agreement with Tri-State Generation and Transmission. And so for us, it was a huge milestone and a significant one for this project, because what it means is now we can move forward on some of that other permitting that we might not have done previously, just because we're waiting for this interconnection to come through. And what it means is we have a route to market for this power. Still need to sign a power purchase agreement or determine whether or not or how we're going to sell the power, be it through a PPA or such. But this is a big milestone for us. And if you look at what this does for us in terms of the projects in the U.S., we have this project, we have the Vernal battery storage project as well. So some significant bulk behind us, both that have interconnection agreements in place, which is quite substantial for these types of projects, and really what unlocks value. It's sort of that next value creation step along the project development path. Of course, with this project, we want to own and operate this. We believe we'll have the ability, by the time this gets to construction, to own it 100% and inject equity into this project and operate it long term. And obviously, if you look at what we have under operation right now at 11 megawatts, this would be a significant addition to that. So that's kind of the growth that we're seeing right now in the industry, in our company specifically, and why we think it's a pretty exciting investment opportunity for Revolve shareholders. Also, just because the underlying fundamentals of the company are quite strong. Recurring revenue combined with projects like Primus, which now has its interconnection agreement, that provides that sort of medium-term lift for our portfolio.
All right. So I was going to ask that. So Revolve is planning on keeping that project in-house, not selling it off, like the big one you did a couple years ago, and then capturing all the revenue and the EBITDA and cash flows on a 20-year basis or whatever the project lasts for.
Yeah, absolutely. Generally speaking, so we're targeting projects either through M&A, through our own greenfield development, or late stage acquisitions, targeting projects on the utility side, anywhere up to, sort of 20, 30, 40 megawatts, that we believe that we have the ability to own and operate ourselves. We're still developing those bigger projects, particularly in Mexico, where we have a couple of projects that are over 100 megawatts and more, that, it might make more sense for us once they get to that stage in terms of development to sell them to a larger developer and take some cash off the table. The goal for this one, though, is definitely to own and operate it. As we get closer to that stage, obviously, we'll have to put together the financing for it, which our team has done in the past. So yeah, I mean, ultimately, we want to have significant assets under ownership, operating them, generating that cash flow for the company.
And these projects, because they're have power purchase agreements and they're sort of long-term utility scale projects, they have a fair amount of debt on a project level attached to them, which basically means that it's not like you have to fund the whole thing through an equity raise or dilution in that. So it's a highly, not levered in a bad sense, but in a prudent sense, project that then excess cash flows and spill over into Revolve without creating a lot of dilution or any. Okay.
Absolutely. And if you look in the States particularly, and maybe to come in Canada, you have another piece of the sort of capital stack, which is tax equity. And so in the US, you have these tax credits that are available. And if a company doesn't have the tax appetite to take advantage, you can bring a tax equity investor in who would bring up to, almost close to 30% of the capital cost of the project. You'll stack long-term debt on that as well, perhaps some mezzanine debt on there as well. So the actual equity slice is significantly lower than the overall capital cost of the project, without a doubt. The majority of it is long-term debt, and especially in the US, that tax equity partnership as well.
I think that covers the main topics here. Thank you. Is there anything else you want to comment on before we wrap it up?
No, I think that's it. I think we're just excited about the prospects for 2025, build on everything that the team has done to date. Yeah, it's a pretty exciting time for Revolve, without a doubt, given the progress that we've seen on these types of utility projects, but also, as I mentioned, that underlying recurring revenue base that we have is unique in the market right now.
Mike, Tanya, thank you very much for giving us an update here. All the best, and I look forward to getting updates from you as things progress. Thank you.
Thank you.
Yeah.